2023 is here and market action got underway this week. Today, we're going to take a look at how silver and gold have started the year and, most importantly, where they are likely headed based on current respective valuations versus historic precedents. For example, the U.S. stock market is still historically overvalued based on a range of long-term data sets. Wall Street legend Burton Malkiel hurt stock bulls' ears today by stating the following on CNBC.
What do you think of where markets are today?
I think markets are still relatively expensive. And the metric that I use, which is not a metric that's going to predict short-term changes. I'm still the random walker. Nobody can predict the short-term changes. But what does the best metric to predict long-run changes, long-run returns, is the so-called CAPE ratio. In other words, the cyclically adjusted price earnings multiple, not the multiple on 2020 earnings, not the multiple on expected 2023 earnings, but rather the multiple on the average earnings over the last decade, what the old Graham and Dodd book would have called earning power. And that metric is well above average. And what it suggests to me is not for the next year or 2 years, I can't do that, but it suggests that returns over the next decade are less likely to be the 9 or 10% historical returns over the last 100 years, but much more in perhaps the 5 to 6% range.
The CAPE ratio he cited is still at historically high levels, and 5 to 6% returns over the next decade is likely to underperform real price inflation by more than half, as the fiat Federal Reserve note is poised to go into a secular bear market as commodity values melt higher versus paper assets and bubble real estate valuations. One of the best precious commodities to use in judging long-term valuations is gold bullion. This is an over 100-year chart illustrating the S&P 500 stock index divided by the spot price of gold. Similar to the prior CAPE ratio chart, we see that since 1990 roughly, we've seen only brief dips below historic overvaluation levels, where stocks are way more expensive than gold on a long-term basis. The S&P 500 today closed just under 3,900, which is valued at just over 2 ounces of spot-priced gold. When I look at this long-term chart, given the fundamentals of the markets and historical debt and unfunded promise piles coming due in the decades unfolding, my intermediate long-term target is to at a minimum get back to the 2011 low, seen here by the yellow line. How much further it might fall beyond that is a question no one can intelligently guess at the moment, at least not yet anyway. Silver bullion stackers increasingly seem to be confident that they have placed the right long-term bet owning silver bullion, especially when considering the monumental drain of underlying bullion in the Comex over the past nearly now 2 years running. My Twitter friend @MikeSay98 posted some incredible charts today, the first of which comparatively lays out just how large were the 1,000-ounce silver bullion bar withdrawals from the Comex in 2022, compared on a relative percentage basis over the past 20 years ongoing. Only in 2004 did we see a larger percentage decline in underlying silver bullion from the Comex versus last year in 2022. And in 2005, silver had a solid gap up in value to follow. Currently, registered or deliverable silver bullion from the Comex stands at just over 34 million ounces, but last year's decline in registered silver on a percentage basis was unprecedented, gapping down negative 58%, the largest percentage decline in 2 decades of data. Not only fundamentally does silver start the year on a bullish foundation, its long-term price chart spanning this entire full fiat currency era is signaling a massive cup and handle that looks poised to produce violent moves to the upside in time. Turning to the physical gold market, as central banks last year bought bullion at the fastest pace they've done since the 1960s. It's become obvious central banks, especially in the East, are trying to quickly add gold bullion allocations to their foreign reserves, often to lessen their dependence on reserve fiat currency holdings. For instance, the inflating fiat US dollar or the fiat euro. Even after the last few years of Western gold ETF sell-offs and Western to Eastern gold bullion outflows, the spot gold price continues to show strength at the moment. What happens when institutions and Western momentum traders begin reallocating back into gold? Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
Raise your hand if you like free stuff. We were going to give away a free tube of the brand new 2023 Silver Eagle coins. Then we said, nah, make it 25 tubes. SD Bullion is at it again with the Silver Eagle Monster Box Sweepstakes. How many coins are in a Monster Box? Let's just say one lucky participant is going to be showing off their best celebratory dance moves with 500 shiny new Silver Bird friends. So head over to sdbullion.com/sweepstakes for your chance to win.
Click the link below to enter your chance to win this 2023 American Silver Eagle Bullion Coin Monster Box giveaway. Good luck to all of you who enter and for your chance to win. The silver and gold markets had a mixed but overall positive week of trading price action. The spot silver price closed 24 an ounce ask, while the spot gold price closed with strength today, finishing the week near a $1,870 per ounce ask price. The gold-silver ratio climbed this week to close at 78. And it remains a question for me and many onlookers on how this important ratio will trade in the coming months to start this year. And I've seen bears claim that GSR is going higher in the short term, while some silver bulls out there are pointing out key lower levels of support for silver outperforming gold in the months and years to come. And while a GSR of 64 or 46 are technical support levels on this chart, and count me in the camp that targets going back to the 2011 low near 33 and perhaps lower, as a bull mania in bullion propels a historic tightening of this important ratio, with silver outperforming gold over key time frames to come. Moving on to look at some closing record bullion coin sales data for respective sovereign mints in 2022 relative to recent history. Last year was a record setter in terms of gold bullion coin sales, not merely with the US Mint, but also at Australia's Perth Mint, and as well with the Austrian Mint in Europe. This photo was recently taken just about a week ago, and you can see a line stretching out of the Austrian Mint as bullion buyers wait in the cold rain to get their chance to swap fiat euros for physical bullion coins struck by that government mint. And perhaps they too heard the news this week. The ECB is planning on a, quote, realization phase scheduled for autumn Q3 2023 for the potential fiat euro CBDC system launch, perhaps by the end of this year or sometime in 2024. And finally, to close this week's SD Bullion market update, I wanted to give you all a heads up on a sneak peek video posted a few days ago, filmed behind the scenes at SD Bullion's new state-of-the-art pick and pack facility. The Yankee Stacking channel on YouTube visited SD Bullion last month, and I'm going to leave the link of the video in the comment section below for you to go check it out if you're interested. In it, you're going to find our company's CEO, Tyler Wall, and he will give Yankee and you a tour behind the scenes of our high-volume bullion business. I think many of you will find it fun and worth checking out. As for me, I'll be here next week, God willing, and as always, to you out there, take great care of yourselves and those you love.
Look at that, guys. I have never seen so many monster bucks. Oh my goodness. Look at all these monster boxes. Whoa. That is incredible.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.